As I'm sure you've seen, the Bank of Canada cut their overnight rate by 0.5% or 50 basis points. And this was really widely expected and anticipated moving forward. We've seen inflation come down, and you also have all the chartered banks looking at them saying, hey, cut by half a point. So when you have that sort of stuff on the line, generally speaking, yeah, 50 basis point cut totally makes sense. And today I'm going to dive into this rate cut and what it means for you as well as the broader economy. But before I dive into this, my name's Miles Noack of the Noack Mortgage Team powered by Indy Mortgage. And if you get value out of my videos or if you're new here and like this type of content, hit that like and subscribe button so more people like you can see my video. Now grab yourself a coffee and let's dive into some rate cuts. The main challenge arising from rate cuts is understanding how it affects borrowers' costs, inflation, and the overall economy. With policy rate now down to 3.75%, this move marks the fourth consecutive decrease since June. The Bank of Canada aims to stabilize inflation, which has returned down to their 2% target. Let's dive into the details of this rate cut and its broader implications. According to the Bank of Canada, inflation has decreased significantly, dropping from 2.7% in June all the way to 1.6% in September, and they expect it to remain around 2% in the coming months. This is great news for Canadian households, as it means the pressure on prices is easing. Lower rates are intended to spur economic activity, making borrowing more attractive for both businesses and consumers. Mortgage rates, for instance, may see some relief, which could be beneficial for those looking to buy a home or refinance their mortgage, or anyone with a renewal coming up in the coming months. However, there are potential downsides. The bank pointed out that with inflation down, the economy still faces challenges like soft business investment and high unemployment rates around 6.5%. The bank hopes that these rate cuts will encourage spending and investment, but there are risks if growth doesn't pick up as anticipated. Additionally, the bank has indicated that further rate cuts may be on the horizon depending on how the economy evolves. The key takeaway here is understanding the potential future economic landscape. The Bank of Canada is trying to balance economic recovery with stable inflation. Will these rate cuts spur enough growth to bring the economy back on track, or will they lead to unintended complications such as rising household debt or an overheated housing market? The bank aims to support demand and keep inflation in check, but the future remains uncertain. And one thing I'm going to say in regards to a 50-point cut, that can almost be classified as an emergency cut. A normal cut will be the regular 0.25% that we've been seeing all along. Now, I know there's some people that have been saying that 0.25% was them dipping their toes in the water. Correction on that 0.25% cut they made at the very beginning of this rate cut cycle, that was dipping their toes in the water. The two after that were just standard regular cuts. This one could be classified as an emergency cut. We've got high unemployment, we've got really, really low inflation to the point where if you take out housing, we're at 0%, and we want to see that stop. So now they're at a point where they're cutting rates more aggressively, and in my opinion, it's because they're a little afraid. So keeping an eye on this is going to be key. To wrap this all up, we've covered the implications of the Bank of Canada's decision to cut rates by 0.5%. This move presents opportunities for lower borrowing costs, but it also carries some risk that will need to be managed carefully. Now, I want to know what you think on this. Do you think we're going to see another rate cut in December? And do you think they're going to cut by another half a point, or are they going to claw that back to 0.25%? Once again, my name's Miles Noack of the Noack Mortgage Team. Thanks for tuning in. If you haven't, hit that like and subscribe button if you find my content interesting, and we'll catch you next time.